In the 2.5 weeks since the election, all sorts of Trump trades have caught fire. Everything crypto's up huge. Bitcoin's up 43%, Coinbase up 57%. Private prison stocks are soaring 69%. And of course, Elon Musk's Tesla is up 40%. Buy! And hey, maybe they keep running, but honestly, many of these knee-jerk reactions seem pretty extreme to me. So tonight, I want to give you what I think is a more sustainable Trump trade. I'm betting the whole natural gas ecosystem will thrive with the Republican trifecta in Washington. Our country is blessed with abundant quantities of natural gas, which can be produced on the cheap. Some people think we're the lowest in the world. But thanks to the Biden administration's antagonistic attitude toward fossil fuels, along with the weaker global economy, the nat gas complex has underperformed for most of the year. I think that's about to change. See, while we've got tremendous amounts of natural gas, we don't have the infrastructure to get it where it needs to go, in part because the Biden White House loves blocking new pipelines and even declared a pause on new liquefied natural gas export authorizations. That was a stunning comeuppance, by the way, to one of our strongest industries that employs thousands of people in high-paying jobs. The betting is that Trump's going to undo that on day one, giving new life to all these LNG projects that really have been stuck in limbo. A lot of them canceled, by the way. We already know that Trump has appointed an oil exec as Energy Secretary, Liberty Energy's Chris Wright. And this guy makes Exxon or Chevron look like Greenpeace. He's going to give the industry everything it wants and then some. I think he'd drill in a schoolyard when they are playing dodgeball. Now, since the election, natural gas itself has spiked more than 17%, although much of that's thanks to a recent cold snap after a warm fall and a generally late start to winter. Seasonally, this is a good time for the commodity, but I also think that there's some optimism about the future of the industry driving this move. So if Trump's going to give the natural gas industry whatever it needs, what's the best way to play this? First, you could own some producers. Now, I happen to like a company called EQT, which is exclusively focused on natural gas, operations in the Appalachian Basin across Pennsylvania, West Virginia, Ohio. After spending a couple years trading sideways, EQT's caught fire since the election, climbing 22% to its highest level since late 2022. Even before the election, the stock was getting some buzz. Bank of America reinstituted coverage with a buy rating in late October. Then the next day, EQT reported a terrific beat and raise quarter, which did shock me. Earlier this year, EQT made a pipeline acquisition, buying Equitrans, all-stock deal, valued the company, combined company at more than $35 billion. That closed in July. In the latest conference call, EQT CEO Toby Rice, a real smart fellow on our network a lot, was ebullient about the merger, saying, and I'm going to quote it, transformed EQT into America's only large-scale vertically integrated natural gas business, end quote, and true, before noting that the integration is well underway, and saying that all sorts of efficiencies are being unlocked along the way. If the natural gas rally truly has legs, then I got to tell you, EQT, by the way, I still very much like Coterra Energy, currently the only energy holding in my charitable trust, which, of course, you can follow by joining the CNBC Investing Club. This is another exploration and production play, although it's more balanced between oil and gas. In fact, after a pair of acquisitions announced earlier this month, Coterra's revenue mix will tip a bit more in favor of oil. Next year, we like to say it's more oily, less gassy. It does happen to have the lowest cost natural gas of any company in our country, and that's because of the legacy of the old Cabot Oil and Gas, which created Coterra when it merged with Cimarex and rebranded the combined company. I like Coterra Energy because it's one of the shrewdest operators in the industry. I trust them to handle whatever environment we already have, making it a great long-term holding. When reported late last month, Coterra announced that they'd signed 3 new liquefied natural gas supply agreements to sell a total of 200 million cubic feet per day, indexed to international price points. Now, that's huge because international price points are much, much higher than domestic ones. The actual sales won't take place until 2027, 2028. That was a bummer to me. But it's the nice, look, they're going to unlock a lot of demand, and I think it gives it a great glide path for the next couple of years. When we spoke to Coterra's CEO, Tom Jordan, a couple of weeks ago, he told us that there's, quote, there's more of that to do. And you know what that meant? That meant be patient. He's going to do some more deals, but no deals that aren't accretive. Other than the producers, what works if you're betting on a natural gas renaissance under Trump? I do that as a pan to Will Frost. How about a pure play on pipelines? Much easier to build these under a Republican administration. There are plenty of good options here. I've been consistently bullish on Energy Transfer and Kinder Morgan. They yield 6.8% and 4.0% respectively. But rather than those two, I actually want to pound the table on one that I think is, it's getting a little support, but it's not like, it's called Enbridge. We've had them on air. The Canadian company that transports nearly 20% of the natural gas consumed in the U.S. and also operates North America's largest natural gas utility, by volume at least, serving customers in Ontario, Northeast Ohio, Utah, and North Carolina. For the pipeline business, the company is very strategically located, assets connecting to the Gulf Coast to the eastern Midwest, meaning the Appalachian Basin. They actually are in the Gulf king, okay? They also go across the Northeast. They can get natural gas where it needs to go. Their system is just incredible. After spending a long time, I mean like a super long time in the doghouse, Enbridge has taken off in the back half of the year, rallying 22% since the end of June. Even after that move, though, the stock sports a bountiful 6.1% yield. It's one of the safest dividends around, totally covered by the cash flow. We've been with it the whole way for years now, and have been able to get that juicy yield while waiting for what some thought was Godot, but it turned out to be Trump. That was not bad. Finally, with a new, more fossil fuel-friendly administration coming in, I think it's time to start thinking about the direct liquefied natural gas export plays. Again, we've liked them for a long time. Probably we were the first to like them in the whole country. And the best play is the one we first recommended, which is Cheniere Energy. They were a first mover and have a nice lead when it comes to nat gas exports actually happening right now. The stock trades sideways from the mid-2022 until the middle of this year, but it's gained a mere 15%, any way you want to look at it, since the election reached new all-time highs. I also like Sempra, which is a more diversified power company, but has plenty of nat gas exposure through regulated gas utilities in California. Big nat gas pipeline network that helps bring gas to Mexico. Can you believe that they need our natural gas after being so big in it, but they haven't done any of the infrastructure? It's also got a growing portfolio of LNG export facilities in both the U.S. and Mexico. This is another name that's broken out since the election, straight up, actually, also up 15%. Now, I would be a little more cautious here. I'd buy some and then wait for it to come down. But here's the bottom line. We're hearing about all sorts of Trump trades right now, and many of these things have made insane moves in less than 3 weeks, to the point where actually they're feeling a little precarious to me. If you want a sustainable Trump trade, I say bet on the natural gas ecosystem. This is an industry that already had a lot going for it. It just needed some cooperation from the federal government, which is about to get. And that's why I can get behind producers like EQT and Coterra, pipeline plays like Enbridge, liquefied natural gas export stock like Cheniere Energy and Sempra. I bet they keep running for the next couple of years, not months. They have all moved, but they are nowhere versus where they could go now that the Biden's anti-fossil fuel team has been broomed for one that is totally supportive of this industry. Mad Money's back after the break.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.